Hi everybody, this is Lara with your weekly video for the S&P 500 for the week ending Friday 14th of April 2023. My microphone died a few days ago. I've got a new one. Please let me know if the sound quality is adequate. There will be reverberation because the room I'm in has only hard surfaces. There's nothing I can do about that this week. I'm travelling to Barbados tomorrow. I'll be there for 6 months, and as I'm settled, I should have more time to do free stuff for you. I'll be asking my membership first in comments what other markets you want me to give you some free analysis of. So you guys will always come first, so that's coming up soon. Hope to give you some more time. I expect next week we're going to start to see a deeper, not necessarily deeper, but a more time-consuming pullback for a little second wave. I'll look for support about 4027.84, or if price gets to that target and the structure's incomplete, or if it just keeps falling through, the next target for support will be 3944.21. The main wave count still remains bullish, and I am quite bullish on the S&P, expecting my longer term target 4750, mid-term target 4506. There still is more weight of evidence in favour of a bullish case than a bearish case. If we see a new high above those August 2022 highs, then I would discard a bearish wave count and have full confidence in the bullish wave count. This is the weekly chart. This is the main wave count. It is bullish. It sees the bear market over down here, and it's labelled primary wave 2 within cycle wave 5. Cycle wave 5 subdividing as an impulse, because primary wave 1 subdivides as a 5-wave motive structure. So 1, 2, 3, 4, 5. The target for primary 3 is at 7742, where it would reach 1.618, the length of primary wave 1. Primary wave 3 may only subdivide as an impulse, and within it I will label intermediate wave 1 incomplete. When intermediate 1 is complete, then we may expect a multi-week to multi-month correction for intermediate 2, which may not move beyond the start of 1 below 3491.58. Intermediate wave 1 is most likely subdividing as an impulse. Within it, minor 1 and 2 may be complete, minor 3 an impulse with minute 1 and 2 complete. Finding support around the upper edge of the bear market channel. This trend line is really important. Draw it from the all-time high to the first major swing high within the bear market. Place a parallel copy on this major swing low. As price approached this trend line, it found resistance and reacted down, another reaction down, a breakthrough, a quick short-term test of support in here, another test of support, another test of support. This is really typical behaviour around an important trend line, and now price is moving up and away. This behaviour around this line supports the bullish Elliott wave count. Let's take a look at that on the daily chart. We're going to look from the low of minor 2 back here. Let's take a look at that on the daily chart. We're going to look from the high of minute wave 1 back here. This high up here, here's minute wave 2, a deep test of support. And now price is moving up and away. Minute wave 3 may only subdivide as an impulse, and a target for it is to reach 1.618, the length of 1 at 4506. Minor 3 also a target to reach 1.618, the length of minor 1 at 4750. It's really common for the S&P to exhibit extended third waves, and when third waves extend, they do so both in price and time, so they kind of look like a stretched out accordion, and you can see the subdivisions within them at higher time frames. So I'll expect minuet wave 2 to show up really clearly on the daily chart, probably also to show up on the weekly chart. It may not move beyond the start of 1 below 3808.86. I'll expect minuet 2 to last 1 to 3 weeks possibly. I won't actually expect it to necessarily be very deep. Common misconception about the S&P 500 second waves is to expect them to reach the 0.618 ratio. I'd expect that for a commodity, but not necessarily for the S&P. So my first expectation for minuet 2 will be the 0.382 Fibonacci ratio at 4027.84. As price gets down there, either if the structure of minuet 2 is incomplete or price just keeps on falling, then attention turns to the next area of support, the 0.618 Fibonacci ratio at 3944.21. On the weekly chart, this is a bearish wave count. It considers, what if the bear market wasn't over there? We can move the degree of labelling down 1 degree and consider this could just be the first zigzag of a double zigzag to continue lower for primary wave 2. So here's the first zigzag in the double, labelled intermediate W. The double is joined by a 3 in the opposite direction, labelled X, which breaches a channel around W, this could explain the channel breach, and yet the bear market could continue. The second zigzag in the double will be labelled intermediate Y, and it may bring price down to the 0.618 Fibonacci ratio of primary wave 1 at 3195. Primary Y would be expected to subdivide as a zigzag. Minor A, B, C should subdivide 535. Within it, no second wave correction may move beyond its start above 4195.44. To the downside, if the bullish wave count is now invalidated with a new low below 3808.86, I would have confidence in this bearish alternate. While price remains above that point, then this is the invalidation point to the upside for the bearish count. Let's take a look at the daily chart. We're going to look from the low of minor B over here. This point down here, here's the end of intermediate X and the start of Y. Should subdivide 535, so minor A, should subdivide as a 5-wave structure. Minute 1 may be over here, minute 2 may be over as an expanded flat. If it continues any further, it may not move beyond the start of 1 above 4195.44. The target for 3 is recalculated at 3730. It'll reach 1.618, the length of 1. On the weekly chart, price is still finding pretty strong resistance, about 4160, a little bit of an increase in volume this week, but overall volume is still declining as price is moving higher. This little increase in volume and the failure to close above resistance means that we should expect resistance to hold until proven otherwise. At this time frame, ADX is at really low levels and still declining, setting itself up for a strong signal, but no signal yet, and price has been essentially range-bound, consolidating since August last year. We need to see a break above resistance or a break below support to have confidence in the direction of the next trend. RSI neutral, money flow neutral, stochastics entering overbought but could reach further overbought. Price really close to resistance. The upward swing within the consolidation may be over here or really soon. Using this model of support and resistance with stochastics, we should expect an imminent end to this upward swing and the start of a downward swing to support. First support 3950, below that 3600. On the daily chart, we can see overall prices rising, overall with declining volume. We had a couple of bearish engulfing candlestick patterns in the last several sessions, and that hasn't led to anything. Now Friday's session completes a long-legged doji, or almost a doji, almost a spinning top. We need to see what happens on Monday to see if this is part of a reversal pattern. But doji within an upward trend is a little bit more of a concern than a doji or a spinning top within a downward trend. It represents indecision, a balance of bulls and bears, and this offers just a little bit of support to the main Elliott wave count that expects a pullback here. Look out for support 4040. However, ADX at the daily time frame is giving us a really strong bullish signal. When ADX comes up from low levels like this and rises up from below both DX lines, this is the strongest signal it can give. The positive DX line is above the negative, so ADX is telling us there is now obviously an upward trend in a relatively early stage. It doesn't mean that we can't see a pullback for that second wave correction, and this does offer some support to the main Elliott wave count. RSI neutral, money flow neutral, plenty of room to go before this new trend reaches anywhere near as extreme as it can for this market. This is an early stage of a trend. Stochastics overbought, but when ADX says there's a trend, we use money flow and RSI, not stochastics. That's there for a consolidating market. ATR declining as price moves higher is absolutely normal behaviour for this market. On the weekly chart, a little bit of concern for a bullish case. This week, price has closed ever so slightly above this previous high for the midterm. The AD line is quite a ways off though. This upward movement in here is small and mid caps are weakest, and that's a feature of an aging bull market, not a feature of the early stage of a bull market, which is what the main Elliott wave count expects. However, it was small and mid caps leading here up off the low. They're a lot more weaker now in this portion of movement, so that would tend to offer a little bit of support to the bearish alternate Elliott wave count. For the short term, prices moved higher on Friday, the AD lines moved lower, but because this is a long-legged doji and it's closed red, it's just not clear enough to consider as divergence. There's no new short-term divergence to resolve between price and the AD line on this chart. Between price and the Nasdaq AD line on the monthly chart, there's still this very long-term bearish divergence. It's been in evidence for many, many years, and yet price has continued, the S&P has continued in a bull market, overall a secular bull market. I think this is probably going to develop further before the secular bull market ends. It's not looking good for eventually when it does end, but it's obviously hopeless in terms of timing. It is pretty bearish though. It could continue further before the bull market comes to an end. On the weekly chart this week, prices moved higher, so is the Nasdaq AD line. No new short-term divergence. There was a very short-term bearish divergence last week, hasn't led to anything, so that signal failed. There's still this mid to long-term bearish divergence between the COVID 2020 lows. Again, that could continue to develop further before the secular bull market comes to an end. Between price and inverted VIX, there's some strong bullish divergence. Price is moving higher but has not made new midterm highs. Inverted VIX has made new midterm highs. This divergence is bullish and supports the main Elliott wave count. For the short term, there's bearish divergence between VIX and VVIX. I'm going to give this the least weight of all of it. VIX has made a new short-term low. VVIX has failed to make a corresponding low. With volatility of VIX elevated, this is bearish for price, but it isn't as reliable as the signal from inverted VIX and the AD line. I'll give those more weight. And we see that same divergence you see on the weekly chart, we see it here on the daily chart. It's bullish, and we see the same divergence on the weekly chart here on the daily chart between VVIX and VIX. It's bearish. That's it for me this week with your S&P analysis. I hope everyone's looking forward to an awesome weekend.